Welcome to the video on Ichimoku Cloud Trading Strategy. In this series, we will be learning about Ichimoku Kinko Hyo indicator and application of same across various time frames. Concepts discussed in this series will be useful in understanding the various Ichimoku trading strategies that we will be covering ahead. So let's get started. Ichimoku Cloud is one of the most underrated indicators out there in the market. Not only does this indicator help you identify which stocks to focus upon, it also helps you identify precise moments when you should be participating in the stock. One of the main aspects of trading successfully with Ichimoku Cloud is to understand all of its components fully. Unless you do this, you will not know when to trade and when to sit on the sidelines waiting for a trade. In this part, we will be learning each element in detail and will also be learning about rules with respect to trend and momentum. By the time you finish this video, you will be able to tell in one snapshot whether you need to trade a particular chart or select a different chart to trade. Let me just show you how to get these charts, as I will be posting charts from investing.com website. So once you go to investing.com, you should then click this indicator tab here and then select Ichimoku Cloud. Do note here that Ichimoku Cloud is an indicator and it can be plotted on candlestick charts, bar charts, and line charts. You can also find this in your own technical analysis platform and the platform provided by your broker. In investing.com, once you plot Ichimoku indicator, you will then get the input and the style column that I've marked here. In the input column, you will have 4 parameters: 9, 26, 52, and 26. These are the default parameters for Ichimoku Cloud, and I would advise against changing these into some other value. In my own research, these standard parameters still work very well in the market. Now, there are different theories as to why these parameters were chosen. I feel it was more related to the fact that through Ichimoku indicator, market structure over 1 week, 1 month, and 2 months was supposed to be studied. Before experimenting with these parameters, first learn Ichimoku Cloud with standard parameters, as this would help you understand this indicator better. When you plot the Ichimoku Cloud, you would get 5 key elements on the chart. By looking at these elements, beginners often get confused. Now, in my own opinion, understanding each element on its own is essential to profiting from Ichimoku Clouds. I will be taking up each element in depth in the subsequent slides. So the first key element is Tenkan, and this is also known as conversion line in many softwares. The second key element, if you see, is Kijun, and this is also known as baseline. Now, before moving forward with other elements, let me first explain Tenkan and Kijun in detail. Now, once I finish explaining these, I will then explain the remaining elements. Tenkan or conversion line is calculated as the average of highest high and lowest low of previous 9 days. I have posted the formula for this on the chart at this section. Now, in Ichimoku Clouds, do note that high and low price is given as much importance as closing price. Closing price is more important in Western technical analysis concepts, whereas in the Japanese concepts, high and low price is given more emphasis. Japanese feel that high is the point where supply sets in and low is the point where demand sets in. Hence, in order to analyze overall price action, high and low price should be considered as well. Now, if you see, even in standard candlestick charts, tail and shadows are given a lot of importance to analyze overall demand and supply in the chart. In Ichimoku Clouds, every element has a crucial role to play. And therefore, when you start looking at charts through this indicator, get into the habit of analyzing what each element conveys. When you're looking at Tenkan or conversion line, the first thing you need to look for is whether Tenkan is trending or whether it is flat. A trending conversion line would indicate strong trend is in place, whereas a flat line would indicate price is simply consolidating. If you look at the chart in front of you, in all these phases where conversion line is trending, you should think about participating in the direction of trend. Conversion line or Tenkan is also important as it acts as continuous support or resistance for price. In a trend, price repeatedly touches conversion line as it progresses higher. This in turn can act as entry opportunity, which we will discuss in the subsequent parts. Let me now show you how moving average and Tenkan are different. In this chart, I have marked the conversion line, that is Tenkan, in blue, whereas 9-period moving average is marked in orange. If you look at the moving average, it is much smoother than Tenkan. Moving average, if you see, is simply the average of previous 9 days of closing prices. Tenkan, on the other hand, takes the average of high and low, and this is mainly why it flattens out when price stops making a new high or new low over a 9-day period. Look at how many times price moves lower than moving average. This is certainly a disadvantage for moving averages when traders prefer it for trading. Tenkan, on the other hand, acts as good support region and price does not pierce it that often. This makes Tenkan more viable over short term. Now, as Tenkan flattens out, it clearly gives indication to trader to stay away from price. This is mainly because when Tenkan flattens out, it reflects that price is consolidating. So let us now focus on Tenkan as a trend following indicator. In the previous slide, we did see how price violates moving averages more often. Tenkan, on the other hand, is a good trend following indicator. When it comes to Tenkan, keep two rules in mind. Number one, rising Tenkan reflects uptrend and falling Tenkan represents downtrend. Now, a trader at all times needs to align in the direction of trend. Number two, when price is above Tenkan, it is considered bullish. Whereas when price is below Tenkan, it is considered bearish for price. Now, these are the two broad rules that you have to follow at all times. Let us now discuss about Kijun, which is also known as baseline. Kijun or baseline is calculated as the average of highest high and lowest low of previous 26 days. I have marked the same on the chart here. Baseline can be plotted across all time frames, right from a 1-minute chart to a monthly time frame chart. When you plot Kijun on the chart, more often than not, it will act as point of balance which attracts price towards it. When price is above Kijun, it is considered bullish, and when it is below Kijun, trend is considered as bearish. Do note that when Kijun is rising, this denotes trend is up, and when Kijun is falling, this denotes trend is down. There are also periods when Kijun is flat, and that represents consolidation in price. Kijun also acts as support and resistance for price, and this is evident in the chart that I have posted in front of you, where price takes support and resistance multiple times around this. One more application of Kijun is that it acts as stop loss level. Do note here that price can move below Kijun at times, but it is the closing that eventually matters. Price should decisively breach Kijun for it to act as a valid stop loss. Now, this is an important rule here, and do keep this in mind. Let us now compare Kijun and 26-period moving average. I have marked the moving average in orange line, whereas Kijun is marked in brown line. Moving average again is very smooth and follows price with a lag. Kijun, on the other hand, follows price more closely and hence acts as a better support and resistance level. In all these instances, it is the Kijun where price takes support as it decisively moves below the moving average. Now, the greater number of charts that you study, the more clearly evident this would become. So now that we have understood the base and conversion line, that is Kijun and Tenkan, let us now understand the remaining three components of Ichimoku clouds, that is Senku A, Senku B and Chikou. Now do note here that I am not familiar with the Japanese form of pronunciation, so in case I am pronouncing these things wrong, kindly excuse me for that. Let us now understand the construction of Ichimoku clouds. Not many traders take the effort to understand this fully and hence do pay attention. Now, Senku A is also known as lead 1 and it is the average of baseline and conversion line. That is average of Tenkan and Kijun. Once Senku A is calculated, it is then projected 26 days into the future. Now, this may seem little confusing and therefore pay attention on the chart. Look at today's lead 1 value at this region. This is the result of averaging Tenkan and Kijun values 26 days ago. I hope this is clear. As a rule of thumb, when you spot lead 1 value rising in future, it is considered bullish for price. On the flip side though, when you spot lead 1 value falling in future, it is considered to be bearish for price. In this chart, if you see, lead 1 value is seen falling over short term. Therefore, trend over short term is not that positive. Let us now move to Senko B or lead 2 indicator. Senko B, which is also known as lead 2 indicator, is calculated by averaging highest high and lowest low of the last 52 periods. Once this is done, Senko B is then projected 26 days into the future. That is 26 periods in future. If you look at today's Senko B value at this region, it was formed 26 periods back. I hope this is again clear. In this chart, 52-day high is at this point and 52-day low is at this region that I've marked. Senko B therefore is the average of both these levels. Now similar to Senko A, if level of Senko B is rising in future, it is considered as bullish. On the flip side, if Senko B is falling in future, it is considered bearish. Let us now understand trend implication with Senko A and Senko B together. Now that we have understood Senko A and Senko B, let us now understand trend implications for the same. Since Senko A is faster than Senko B, whenever Senko A is above Senko B, it is considered as bullish. On the flip side, whenever Senko A is below Senko B, it is considered as bearish. Do recollect that Senko A is the average of Tenkan and Kijun, which are calculated over maximum of 26 period interval. Whereas Senko B, if you see, is average of last 52 period high and low, and hence it is slower than Senko A. When Senko A and B come together, you get the Kumo cloud. This area here between Senko A and B is shaded, and this region acts as support and resistance for price. Let us now look at Kumo cloud based on what we discussed. So this is how the Kumo cloud looks like. The region here marked in green is where Senko A is above Senko B, and hence this is the region of support. Region where cloud is red is where Senko A is below Senko B, and this region then acts as strong resistance for price. If you look at this region here, look at how price has taken resistance right at the Kumo cloud. This is again very common, and this repeats on a consistent basis. Do note that Ichimoku clouds are trend following indicator, and therefore you will see these lagging price. But before judging the effectiveness of this indicator, I would strongly recommend for you to study it in detail first. You will be amazed at its ability to help you understand the overall price structure of market. It is also very handy at precisely telling you when you should be trading in the market and when you should be stepping aside and waiting for a trading opportunity. In this chart, you can see the Senko A and Senko B along with standard candlestick charts. In order to identify trending phases in the market, make sure both Senko A and B are trending. For example, if you look at this chart, look at the region here where both Senko A and B are trending. In such phases, as a trader, you should be willing to participate in the market. This is clear indication of momentum being present, and hence these are the times when you should initiate a trade. For long trades, always prefer both Senko A and Senko B are rising. This way, you will increase your odds of success. So as of now, we have understood Tenkan, Kijun, Senko A and Senko B. Let us now move to the last element, that is Chikou. Let us now understand the Chikou within the Ichimoku clouds. Chikou is the current price that is shifted back 26 periods. If you look at the chart in front of you, this current price action that you see here is shifted 26 periods back. Now, Chikou component is quite often the most underutilized element of Ichimoku clouds, but make no mistake that it is extremely important in overall price structure analysis. As a rule of thumb, whenever Chikou is above price, it is considered bullish. And whenever you find it below price, it is considered bearish for trend. In all these instances here where Chikou is above price, it is bullish and you should be looking to trade only on the long side. Similarly, in all these instances when Chikou is below price, prefer trading on the short side as trend is clearly bearish. I hope these two rules are clear. Let us now look at all elements of Ichimoku cloud together. The first thing you can spot is how Ichimoku clouds help you trade only in trending periods. If you look at this region, this is where Kijun was completely flat. Now do recollect that when Kijun is flat, price consolidates, and this means you should not be trading in the instrument. Once Kijun starts rising at this region, price then moves higher in a clear trend. In this region, price was also within the Ichimoku cloud, and this again marks phase of consolidation and not that of trend. At all times while studying Ichimoku charts, there are two basic conditions you have to check. Number one, is the price trending and does it have element of momentum within it? And number two, what is the direction of price trend? If you just focus on asking these set of questions, I can guarantee you your results in trading would improve a lot over a period of time. Let us now take up few case studies and let me show you how to read charts based on Ichimoku cloud. If you look at this chart, let us first begin with Senko A and Senko B at this region. Future projection for both is flat, and this means trend is neither up nor down. But when I look at Senko A position, it is clearly below Senko B. This indicates bias for trend is not positive over short term. If you look at Tenkan and Kijun, price is below both at this region, and hence this is again not positive. Momentum element is also missing as Chikou indicator is not trending, and it is certainly flat in this area of Ichimoku cloud. Based on this overall structure, I would avoid looking at this chart as there is no decisive trend visible. I hope this example is clear. The second case I will take up is of gold. In this chart, price is clearly trending above the Ichimoku cloud. I have marked the same here. Now this clearly represents the price is trending upwards and bias of trend is clearly on the upside. Senko A, if you see, is clearly above Senko B, and this is again a positive sign. Look at price with respect to Tenkan and Kijun. With price being above both, it is clear that path of least resistance is on the upside. Do take a note of Chikou as well. With it being above price, element of momentum is also clearly visible. If you spot such charts in the market, always pay attention to these as trend and momentum are both clearly visible. This is a classic case of buying on dips as trend bias is strongly on the upside. Now that we have seen case of up move and case of consolidation, let us now move to case of downtrend. In this chart, price is clearly trending below the Ichimoku cloud. I have marked the same in this region. This clearly represents that price is trending downwards and bias of trend is down. Senko A, if you see, is clearly below Senko B, and based on the rules we studied, this is a negative sign. Look at price with respect to Tenkan and Kijun here. With price being below both, it is clear that path of least resistance is on the downside. Do take a note of Chikou as well. With it being below price, element of momentum is also clearly visible. This chart is a case of strong downtrend, and you should not be thinking of buying this stock till trend does not turn positive. I hope this is clear. In these three cases, it is important for you to note how Ichimoku clouds help you focus on trending periods in the market. The main advantage of using Ichimoku clouds is to understand the overall structure of market and then to decide if it is the right time to take a trade. Trend related rules that we discussed have to be followed at all times, and do remember that price position with cloud and with respect to Tenkan and Kijun play an important role in price trend analysis. Along with all this, element of momentum should be used to analyze when to trade and when to sit out. Now at first, various elements of Ichimoku clouds will confuse you. This is precisely why I have asked you to watch this couple of times and download the PDF link that I have shared in the video. In the subsequent parts, I will be discussing various setups and techniques across various time frames. In the meantime, if there is any doubt, then let me know in the comment section below, no matter how basic your doubt is. So kindly consider hitting the like button and sharing this video if you find it useful. Thanks a lot for watching this video, guys. Take care and be safe.